So where are the markets really headed from here? Jan Lambregts, who's joining us on the phone line. Hi, Jan. Good evening. This is Ruchi Bhatia. So we did see a very good month of May, a stupendous month of June as well. Where are things really headed for the month of July?
Yeah, good evening. I think much will depend ultimately, particularly in the US, for US stocks, how the lockdowns are going to be. Obviously, the US, without having flattened the first wave, started to reopen in many states. And over the past 1 to 2 weeks, the news flow has not been positive, and they've been trying to curb the rising cases and rising hospitalizations by reversing some of the lockdowns. And in just about 15 states, particularly in the South, in the west of the country, they are doing it now at the moment. Now, of course, we know that markets have been trading quite divorced from economic or even virus reality because of all the liquidity promises. But there too, we have to see more coming through. Some of the stimulus packages are running out in the upcoming weeks. Our assumption is that the politicians will actually agree in Congress on more stimulus. Our assumption is also that the Fed will do more. But yeah, at the same time, those are all assumptions. And we have to then also, get at least a view of that will continue to trump virus reality. I think it is going to be tougher in the first quarter. I think a lot of the good news people are hoping for is not going to materialize. In actual fact, the virus and the longevity of the virus is really going to have an impact on a lot of companies, be it small and medium-sized enterprises, even some of the large companies. And I think some of that is also going to be a drag on stocks. But it's a difficult call with so much liquidity out there.
Jan, what do you make of the testimony that the U.S. Federal Chair and the Treasury Secretary Steve Mnuchin gave yesterday in front of the House Financial Services Committee? The consistent theme, in fact, continued to be the high amount of uncertainty. Do you believe, given the fact that the COVID cases are only on the rise, if you see the comments coming in from Anthony Fauci as well, he's also saying that this is a battle that we perhaps are going to fight for a very, very long time. So in terms of uncertainties, do you believe the markets are completely ignoring some of the longer term uncertainties that we're perhaps dealing with at this point of time?
Yeah, I think the markets are aware of these uncertainties. They just assume now, having been burned many times, that liquidity will trump all. And that's going to be a big assumption. Like I said, Fauci came out and made the remarks. I think there were two messages there. He's afraid that the number of daily cases could go up to as high as 100,000. And he worries, he says, we all seem to be banking on this vaccine arriving, but that is by no means a certainty. He doesn't want to be too pessimistic, but at the same time, he can't just guarantee a vaccine. I think that's a good point to keep making. So the longevity of this virus is just much more there than people think. What I took from the joint testimony of Mnuchin and Powell was that there wasn't a whole lot of concrete detail about how fiscal stimulus would be supported by the Fed. I think it's all implicitly there. But clearly, Mnuchin can't decide for Congress to come up with a new fiscal stimulus package. The fiscal stimulus package itself depends on how the virus goes. Ironically, if the situation keeps going backwards, keeps being reversed, the odds of a big fiscal package are, of course, increasing. And I think we know the Fed will backstop it and do whatever it takes to support that. I think also Powell, going back to Fauci, made now twice, he made that same argument about a month ago, the astute observation where he said, don't expect a V-shaped recovery. Confidence by businesses and by consumers simply cannot return to normal until we have a vaccine or such effective medicine that de facto people's concerns are also alleviated. I think that's what people have to keep going back to. Without that, don't think that what we're currently seeing, some of the jumps in data are V-shaped. It's not.
Right. As we're seeing the uncertainties, continue in the markets due to the jitters of the COVID-19 pandemic, if you see other commodities, especially gold, is where, it seems like people are parking their money, the gold hitting almost an 8-year peak. Do you believe perhaps it is time to include, perhaps gold and silver in your portfolio instead of equities?
Well, it is somewhat cynically time to just buy about everything, it seems, whether that's corporate bonds or stocks for that matter. Government bonds obviously haven't bid up so much already. You have to wonder what yields are particularly left there. That's how I would see sort of how gold and silver are being bid up as well. There's so much money chasing so few assets, and on top of that, so much uncertainty that some of these asset classes stand to benefit. I don't think there's going to be your long-term strategy overall there, but clearly these asset classes have been benefiting from that. I don't think it's the traditional people are so concerned about inflation, though. We have inflation everywhere in our world, but it's asset price inflation rather than consumer price inflation at the moment.
All right, Jan, always a pleasure chatting with you.